of iron ore and crude oil and soy to China. African nations will also feel the economic downturn. China is now the #1 trading partner for most countries on the continent. And in the world's biggest economy, the United States, manufacturing industries are already affected by slower exports to China. Tony Nash is Chief Economist and Managing Partner at Complete Intelligence. He joins us live from Singapore. So China sneezes and the rest of the world catches a cold. Is that the case?
Sort of. That is magnified in Asia. So in Asia, China is rapidly becoming the biggest trading partner for most countries here. So as China slows down, it really hurts the countries here.
We've seen the government trying to prop up the economy. What's it done so far?
Well, there have been some short-term activities around financing, around helping startups, and around some investment as well. There has been an effort, obviously, to prop up the stock market as well. But there are also some longer-term activities like internationalization of the Chinese currency, this One Belt, One Road investment, fixed asset investment program to build ports and roads all around Asia and Eastern Africa, all the way to Europe. So there are both short-term and long-term programs in place from the Chinese government.
So do you think these long-term measures are going to take effect? Because it doesn't seem like the short-term measures are having any impact.
Sure. Yeah, I think the long-term measures are. I think they will, when they happen, they will tick over fairly quickly. The One Belt, One Road program has about $250 billion directly dedicated to it, but kind of a cumulative $1.5 trillion. So it's expected to have a $6 to $10 trillion impact on the economy globally. I think the internationalization of the yuan, it will happen within 2 to 3 years. It's already moving forward. So when you look at places like South Korea, over 60% of its trade with China is paid in Chinese yuan. So South Korea is heavily utilizing the Chinese yuan already, even before the currency is internationalized. So there are a number of things happening for that long-term activity. In the short term, our forecasts indicate that early in the fourth quarter, China is really going to hit a bottom. Things are going to stabilize from here on out, at least until March. So China has a new 5-year plan coming out in March, and from January until March, they really want to see a stable economy.
When it hits that bottom, if it hasn't already, are we going to be seeing a lot of job losses? Because that, of course, is the Communist Party's biggest fear, rocking the harmonious society that it strives to create.
Sure. You know, there is a definite transition with state-owned entities, and we hear lots of stories and lots of anecdotes about factories that are underutilized at, say, 50% or less utilization. So at some point, yes, those job losses have to happen, and this is why the Chinese government is funding, or one of the reasons why the Chinese government is funding a lot of startups in the short term.
Tony Nash, great to speak to you. Thanks for taking the time to join us there from Singapore.
Thank you.
And now let's get the weather with Everton. We're going to stay in China, where there's been some heavy rain in the southwest. Everton, how's it looking over the next